See me, I'm flexing, that's why your niggas stay texting. I stay bringing up checks in, you bitch swear like Texas. See me, flexing, I stay bringing up checks in, you bitch swear like Texas.
Because there is no relationship between the success of your business and the balance in your bank account. Absolutely none. So that's another reason to engage with the financial statements. That then I can actually make a plan and make sure that if I stretch, and sometimes it's like pushing a payment out 1 week, or it might be getting a payment plan with the ATO just to buy yourself some time to get through this cash flow crisis. But you don't, if you're turning up on Monday going, oh my gosh, I don't have enough money to pay wages, you need a cash flow, every business needs cash flow management. But this will tell you exactly what the dips are on a 3-month average, and then you can know, okay, I need X amount of dollars to cover my working capital in the business. Okay. Bottom line is net profit. Okay, top line, turnover, sales, bottom line is net profit. Your gross profit is your sales less your direct costs. On your profit and loss, now we'll go through the elements of a profit and loss statement. I'll take you through that a little bit further, but net profit is the answer there. Which of the following would you find on a profit and loss statement? Depreciation is the answer. Fixed assets, a balance sheet. Accounts payable, balance sheet. Depreciation is an expense, and it's one of these strange ones that accountants create a journal and it pops up. It's not a real expense. What is the purpose of depreciation? Does anyone know? Sorry? It's tax, yeah, it's great for tax because often they give you accelerated depreciation. But the whole basis of accounting is about understanding and trying to match income and expense. So if you buy a car and it's got a life of 5 years, you want to write that off 1/5 every year. So the depreciation is actually a way of, over the useful life of an asset, matching the asset to the income earning part of the business. So if we were to lump in, and this is where it actually, yes, it's a tax benefit, but it's confusing because if you get like an accelerated depreciation, I can write off 20,000 this year, great for tax, but from an operational perspective, that's not giving you a true position of your business operating profit. So we have this whole, challenge between the measure of a great accountant is how small they can get your profit and how little tax you pay. But what you really need to see is my business profitable from an operational, is my strategy working? Is it profitable from an operating point of view? And so we're at competing objectives if you're running your business by the tax accountant's figures. Okay. All right, most important for a daily operation of business. Who put the cash? Yeah. So I refer to cash as the oxygen in a business, and if you starve a business of oxygen, your business will fall over. Okay, you need to continue to fund your business, and particularly if you're on a growth strategy, you need to know what amount of cash it's going to take to fund that growth. Because if you don't fund and give your business oxygen, it will die. And I've seen this when people go into cash flow crisis. It's like, constrict everything, cut back everything because we don't have cash flow, and it kills the business. So always, this where cash flow management, looking at anything in isolation will give you a false view. You have a profit and loss, you have a balance sheet, you have a cash flow. If I focus on cash flow, probably don't understand whether my business is profitable or not. If I focus on profit, then I'm not understanding the funding requirements and how my business, needs to be funded from a cash point of view. And if I